Hey guys, Eagle Trading checking in 8:19 p.m. 4/2/2020. Looking at the SPY SP 500 ETF. I actually like today's action. Yesterday we told you 246.09 I think was the area of support. I think we closed literally right at 246.10 or 15 or something. So right to the penny just about. I like it had an inside day, even though despite the horrible jobs on this morning, which was pretty shocking and scary, the market is staying back above the 9-day moving average, absorbing all this negative energy. I'd love to see it get above this trend line and hold it for 4 days. Four is the magic number. We saw 4 days above the 9-day moving average here, and we keep bumping up against the 20 short term, which happens to be the outside channel on the top end of S&P 500. The long-term support line, which we have not been able to get over, is 255. 255.90, I believe it is. Let's just call it 256. So 256 is the long-term support line. A couple things I hate when people talk about support, and they're always talking about horizontal support levels in a market that's supposed to be moving upward. This market's been moving upward for many years, so why are we using horizontal support lines? And I'll show you what I'm talking about. Let's look at like a 10-year daily on here. Actually, we can do a 15-year and see if that changes the chart. So this is upward movement. We're not using, like, this is not a support line right here in an upward moving market. Support lines all should run from low left to right high. They'll be using these as support lines for long-term markets. Those are support lines for consolidation frames, like along here. That's a support line. But in upward moving markets, if we're talking support, and you want to continue an upward bias, you got to use support lines that move from left low to right high. That's number one. Number two is XLF. That's a problem. We need to get XLF moving. This is the financial, and we're still kind of in this box. I tried to do a video this morning, but I was running behind. So this is a little bit crazy, but bear with me here. So there's some Fibonacci fan channels here that we keep tapping up, and hopefully you guys can follow this here. And now we're trying to stay within this upward consolidation channel here that runs parallel. You can see we just closed below it yesterday, but got right back above it. So everything's kind of hanging in there. Actually, it was kind of positive. I like that also that seeing the VIX, just the VIX is just kind of broken here still. I mean, we had our upward trajectory trend line somewhere along here. I believe it was right along. Actually, the angle's a little bit different, but I think we might have had it right along here. But we broke that line and we couldn't get back above it. Now you're kind of trading sideways, but you're starting to roll over, and the VIX is just getting weaker. Even on market weakness, the VIX has not been able to break up into the upper channel there. That was like the 61, 62 area that we talked about when we showed the shaded areas the other day in the charting. So regardless of what the market's doing, even in down days, the VIX is having a hard time getting or remaining up into the upper end of the channel. So that's kind of broken too, and that looks like it's starting to recede. This should continue to go down on lower volume. MACD crossed over. I mean, not on lower volume, but on pullbacks in the market, this should just slowly stair step down. You know, market pullback, starts to come back in 900,000 points or whatever. This pops back up again, doesn't make a higher high though, and then it keeps rolling back. It might push up and break the candle on the daily, but over time this should start pulling back in. It looks pretty broken here on both the moving averages and the trend lines, so good thing to see on that. Obviously oil helped out today too. Keep that up there a little bit, and the market should be some positive action here. But I didn't like I did not like what I saw in the market today. So looking for a little bit of a higher price. Let me give you the numbers for tomorrow, just like I gave you the 246 the other day on SPY. Resistance is 253 and still remains 253. I think if we start to see a pullback like we're seeing in after hours, your support is actually 247.70, and then once again the 246.09 level on SPY. Remember, we can pull through those levels intraday, but we're going to gravitate back towards those levels. So let me look at the intraday 5-day before we get everything all jacked up here. So those are your resistance and support levels. If we break 243.50 intraday with some conviction, You want to buy the 240.80 area, 240.80. You're going to get a nice bounce there. So those are your numbers. Support 247.70 on a pullback, 246.09 if we don't hold that, and resistance is 253. Above 253, if we get cranking, we break that downward descending line. 255.40 is your next level. So hopefully that helps you guys out, and we'll chat again either tonight or tomorrow morning.